BlackRock has $1 billion of proof sitting in front of them right now, and they still haven't moved. 6 separate asset managers already launched spot XRP ETFs. Combined, those funds pulled in over $1 billion, and for 35 straight trading days after launch, not one of them saw a single day of net outflows. That's a stronger opening streak than Bitcoin or Ethereum ETFs had when they launched. And BlackRock, the largest asset manager on earth, hasn't filed a single form. That's not indecision. That's entry lock. Here's what that actually means for you. BlackRock isn't confused about XRP, and they're not ignoring the demand. They're running the exact same sequence they ran before every major product launch in company history. And that sequence has specific identifiable gates that have to open before they move. Look at the numbers first, because they tell you this isn't a small trend. Combined XRP ETF assets peaked near $1.6 billion in January before settling back around $1 billion after some outflows. In plain terms, real institutional and retail money already tested this product, stayed longer than expected, and pulled back only partially. That's not a failed experiment. That's a market finding its floor. So why is BlackRock still standing outside the room? To understand that, you have to understand how they operate everywhere else, not just in crypto. Think of an authorized participant as the trading firm that creates and redeems ETF shares behind the scenes, keeping the fund's price locked to the actual asset it holds. Firms like Jane Street and Citadel do this work, and they need deep, liquid markets to do it without losing money on every trade. That liquidity is called market depth, and BlackRock will not launch a product into a market that can't absorb billions in same-day trading without the price slipping. Here's the part they aren't telling you about Bitcoin. BlackRock didn't launch IBIT, their Bitcoin ETF, until pensions, endowments, and sovereign funds were already loudly asking for it. Once it launched, it didn't just capture Bitcoin holders. 75% of IBIT's investors had never owned an ETF before. In plain terms, BlackRock turned a crypto product into a doorway that pulled brand new customers into their entire fund lineup, from gold to AI to the S&P 500. That's not an accident. That's the discount and dominate playbook. They ran it again a few weeks ago with a new Bitcoin income fund, undercutting competitors on fees by nearly half a percentage point specifically to swallow market share fast. Put simply, BlackRock never enters first. They enter once the smaller players have proven the market works, and then they take most of it. Now here's where it gets specific to XRP. Think of a surveillance sharing agreement as a formal deal between an exchange and a regulator that lets them watch trading activity together to catch manipulation before it happens. BlackRock leans hard on these agreements before it will custody a new asset at scale, and they're built on top of deep regulated futures markets. Regulated XRP futures on the CME only started trading in mid-2025. That market is still young compared to Bitcoin's, which had years to mature before BlackRock ever filed. Here is the part that separates informed prediction from hopeful guessing. Canary Capital's CEO, Stephen McClurg, whose firm already has a live XRP ETF, said publicly that it wouldn't surprise him if BlackRock files sometime in late 2026 or 2027. That's not a leak. That's not an insider tip. That's one competing CEO's read on the pattern based on watching BlackRock respond to demand rather than lead it. And to be straight with you, BlackRock itself has publicly denied having any active plans to file for a spot XRP ETF, with executives saying client demand is still heavily concentrated in Bitcoin and Ethereum. Both things can be true at once. McClurg is reading the pattern. BlackRock is telling you where their attention currently sits. Neither one is lying to you. In plain terms, nobody outside BlackRock's product committee actually knows the exact date, and anyone promising you a confirmed timeline is selling certainty that doesn't exist yet. Here's what I'm going to show you in a minute, the exact data point that could pull this timeline forward months, not years, and it has nothing to do with price. Now let's talk about the legal layer sitting underneath all of this. The Clarity Act, the bill meant to finally define how digital assets get regulated in the US, is stuck in the Senate right now with a hard deadline. Lawmakers have roughly 3 weeks of working days left before the August recess, and if it misses that window, analysts say its odds for this year fall sharply. Think of this bill as the rulebook BlackRock's legal team needs finalized before they'll custody a new digital asset with total confidence. Right now, that rulebook is still being negotiated line by line. Most people hear this term and skip past it. Don't. Custody rules aren't paperwork. They're the difference between BlackRock treating XRP like a fully cleared institutional asset or a legal gray zone they won't touch with client money. In plain terms, the Senate calendar is quietly one of the biggest variables in whether BlackRock moves in 2026 or 2027. So here's the systemic read, and here's what actually matters for you. Watch three things, not headlines. Watch CMEXRP futures volume. Rising volume means the hedging market BlackRock needs is maturing. Watch the Clarity Act's Senate floor vote. Passage removes BlackRock's regulatory excuse to wait. And watch whether XRP ETF inflows stabilize above that 1 billion mark instead of drifting lower. That's the demand signal BlackRock actually responds to, not price speculation. Strip away the institutional language, and here is what is actually happening. BlackRock isn't rejecting XRP. They're running the same checklist they ran for Bitcoin, and right now, 2 of the 3 boxes are still unchecked. The data proves the clearinghouses are bracing for eventual entry, not an if. The only open question is whether that entry happens on their usual multi-year cadence or gets pulled forward by exactly the kind of demand spike we're already watching build.